Okay, great. We are live for today's webinar session about stablecoins and CBDCs. I think that's a very exciting topic, especially with the developments in this year and also last year in regard to centralized and also decentralized stablecoins, and especially also CBDCs. I have here four wonderful guests. Jonas Gross from the Digital Euro Association, Maximilian Forster from Cash on Ledger, Jörg Brameshuber from the University of Vienna, and Patrick Hansen from Unstoppable Finance. I would suggest that before we touch on all the topics regarding stablecoins, we start with a quick introduction round where you explain yourself and maybe also in regard to the context company you are working for. I would suggest that maybe Patrick starts first.
Yeah, sure. Thanks a lot, Nick. Happy to be here and to discuss with all of you guys. So my name is Patrick. I'm head of strategy and growth of Unstoppable Finance, a super early stage startup that was founded in summer last year by Peter Großkopf and Max von Wallenberg and Omid Aladini, that most of you guys might be knowing, the previous managing directors of BSDEX, the crypto exchange of Börse Stuttgart. Our goal is to build a super slick, super intuitive, multi-chain, non-custodial wallet. We will probably be launching our first product in a couple of months. And prior to that, I worked for a couple of years at Bitkom, the German tech association, driving all our crypto and blockchain topics over there. So had a couple of touch points already with stablecoins and CBDC discussions, especially regulatory-wise. So really looking forward to this discussion.
Okay, thank you, Patrick. Then maybe Jonas next.
Yeah, thanks, Nick, for the invitation. Very happy to be here. So yeah, I'm currently chairing the Digital Euro Association, which is a think tank around digital money. So where we basically also talk a lot about stablecoins, about CBDCs, so also the topic of today, and see how we can contribute to the current debate around these very, very important topics. And besides that, I'm also working for the Frankfurt School Blockchain Center. I guess most of you might know, a think tank related to the Frankfurt School, which looks at various different aspects of blockchain technology in general and also in the financial context. And last but not least, I'm currently finalizing my PhD dissertation on CBDCs primarily. So I do have more like a monetary theory, monetary policy and background, but of course did also kind of a tech deep dive during the last few years, and happy to be part of this discussion today. Thank you.
Thank you, Jonas. The next, Maximilian, please.
Thanks a lot for the invitation, Nick, and it's for having me here today. My name is Max Forster. I'm co-founder of the company which just presented a background, Cash on Ledger. What we essentially do is taking care about digitizing money, and we do that by basically evaluating industrial applications, so pay-per-use models, asset as a service business models, everything which is basically usage-based, and in one or other form has something to do with digitizing money. I'm basically establishing programmable currencies or programmable payments, to be more precise. In that role, we already implemented several use cases, also working with more and more partners in that regards, more and more customers. And in my role, I'm also basically advancements or I'm in favor of the advancements on programmable payments and support several associations, such as, for example, the Digital Finance Working Group from the Economic Council of Germany, but also the Deutsche Kreditwirtschaft in several regards to how industry applications can be based on programmable payments.
Thank you, Maximilian. And then Georg, please.
Hi all. It's me, Georg, from Vienna, from the Austrian chapter of crypto economics, if you might say. I'm pleased to be here. My background is purely from academia. I confront blockchain and the space from the law. I'm glad that I can also work with ITSA on the various topics. I do a lot of policy work on a European and of course national level. Austria just very recently introduced pretty slim framework with detailed amounts, also the DeFi and also the stable coins into Austrian law. So there is a lot of to do right now. There are a lot of developments right now everywhere on international, European and national level. So I'm glad to apply not only legal theory and academia built knowledge, but also in policy making and structuring the new crypto economic framework for the future to come. And of course, stablecoins and CBDCs will be a pillar stone to that.
Mm-hmm. Thank you, Georg. Yeah, first of all, thank you that you're all here today, because I could really not picture like a better panel to the topic of stablecoins. I think we have a very diverse speakers here today. Just like for our audience, like a quick introduction, stablecoins have become like a major part of the whole crypto universe with the inception of Tether, 2016-17. And since then, I think stablecoins have reached in 2021 and 22 now again a new all-time high in market capitalization of around 100 to, I would say, $150 billion. And we have there like different stablecoins on the market at the moment. We have Tether, USDC, which are like more centralized stablecoins under the idea of like a tokenized fund. What we also see is decentralized stablecoins like DAI from MakerDAO, or Magic Internet Money, or Mai on Polygon, which is used for like a broad range of DeFi use cases. And then last, I think this is really something that was also taking off last year at the end of 2021, was Luna as an algorithmic stablecoin, who is now also very dominant in the market. And what we, I think, all follow up at the moment is certainly the developments in the area of central bank digital currencies. I think Jonas is there, I would say the expert certainly on the panel. And what I would like to know from you guys, maybe at the beginning now, how did you guys view last year, or let's say like the last 2 years, in regard to the stablecoin development? And maybe you could also touch on if there's like a favorite stablecoin you are using, and what are you using it for? Somebody goes first.
I mean, if nobody takes the lead, I'm gonna start first off, like with more the industry and B2B perspective. So I think the developments have been like quite astonishing. I think favor, like a large part of it, also comes from the publication back then in the days 2020 as DM, or the Libra project as it was called back in the days, like basically started off where they said and had the global vision of like, hey, how about if we build a cross-border payment system? And I think with the focus of Facebook and like the consortia around Libra, where they had Spotify, Shopify, Lyft, Uber, and all of these companies basically come together trying to create a stable coin, or at least like kind of like a payment measurement where they can actually like globally send payments as easy as a text message. I think this was like a very strong signal towards the market that this is a need which needs to be fulfilled. And afterwards, obviously, like triggered a lot of like developments. Even though we had MakerDAO and like kind of stable coins before, which basically fulfilled, from my point of view, only the safe haven of crypto investments. So you basically just go out of like a Bitcoin investment and basically safe harbor that in a stable coin. Like from that moment on, like I think we had a whole different angle on the whole topic, because from that moment on, like first of all, regulators had a look at the topic. Like even you could name it out, like you could bring it up to discussion that like central banks started to question the sovereignty of money, which is like kind of like the states is basically questioned their own sovereignty of money, because like stable coins basically represented a simultaneous development in the private sector. And with that development, I would say like, it all started off, and like, we had like, as you said, until Luna last year, an algorithmic stablecoin, like all kind of like different measurements and like different kind of functions in stablecoins directly. What I personally like, and coming back like now to what we do as well, is looking at like the function itself, like programmatic payment streams. I for myself rather have a look at like trigger solutions for programmable payments, because this is what can mostly be applied in industrial applications, particularly for business cases such as pay-per-use, asset as a service, which is in the German industry and the European industry quite advanced right now, and where a lot of people draw a lot of attention up onto.
Mm-hmm. Thank you, Maximilian.
Yeah,
So maybe,
or
Patrick, go ahead.
Yeah.
Okay, no, I mean, I would go ahead with it. I just admitted, I personally love stable coins, because they are, I'd say, a safe haven in a, let's say, from an investor perspective, a super safe haven, because they put you on, at least to easy effort in around an, let's say, toxic environment when it comes to safeguarding your assets, which is funny though, because especially when you look at the recent developments and where all this is coming from natively, all these instruments, they are not so super safe as we might all know. And they simply state a lot about the environment we are in. And I think this is also the best way forward for all this new and recent developments where in technology embedded functionality gives assurance to those who want to reach the safeguards. So that's why I think algorithmic stablecoins are really a big step forward. And that's also my confession that, of course, those are, I think, these ones where we should let some eye down. So Patrick.
Mm-hmm.
Yeah, I just wanted to add that taking a step back, looking at what happened last year, 21, with regards to stablecoins and CBDCs, I think was just a year of like terrific growth for stablecoins alongside the overall crypto market. I mean, we all know how prices went up and activity went up last year. And I think stablecoins are kind of correlated to overall crypto activity and crypto market growth and trends. So I think at the beginning of last year, the whole stablecoin market cap was maybe around like 30 or 40 billion. It probably 5x or 6x by now to like 170 or 180 billion. And I think, I mean, it is mainly driven by the overall growth of the crypto markets. So stablecoins still today are mainly used out there for crypto trading, or they are mainly used on exchanges such as Coinbase and Binance and others to trade assets, to just basically hold non-volatile assets on your trading exchange. Stablecoins, I would say the second biggest use case for stablecoins right now is DeFi, especially for USDC, so the Circle issued dollar-pegged stablecoin. And obviously DeFi has been growing tremendously also last year, like to over 100 billion of like value locked inside those DeFi smart contracts. And a lot of that value locked is basically stablecoins, especially USDC. So I would say, I mean, apart from all the innovation that happened around algorithmic stablecoins with new forms of stablecoins popping up like MIM and UST on the like Terra blockchain, I think the overall, like the big picture is just stablecoins are growing tremendously. And it makes obvious to both like big private institutions, big private companies, but also the public sector that there is a clear demand for stablecoins, for blockchain-based stablecoins on the market. And that's why I think the big like financial flagship institutions like PayPal, like the big banks, why also central banks are now like eyeing this sector very closely, and why they're like all getting into own stablecoin plans or own CBDC plans. In terms of CBDCs, I'm happy to hear Jonas' perspective. My personal view on the topic is that it's still very much in an early and conceptual phase of CBDC implementation and planning. So I feel like, because we've written in my times at Bitcoin, for example, almost 2 years ago, we've written a paper, an article on like the current state of CBDC research. What are the main technical, governance, political trade-offs in those kind of design choices and decisions? And I feel like in most of those questions, at least from a European ECB's perspective, there has not been like a huge progress so far, but I might be wrong on that.
Yeah, maybe building on that, Patrick, I do agree. I mean, I think we are very early in the CBDC kind of debate, and we as the Digital Euro Association also contribute to the CBDC tracker, which is basically a global tool to compare CBDCs. And what we kind of see there is that there are like a few countries live, so probably 2 to 3, depending how you classify it. And China might follow in February, which is a really big step, right? It's the first advanced economies joining this the CBDC like kind of race, or this Champions League, if you want. But from a European perspective, I do agree. I think this might take another 4 or 5 years if we listen to ECB communication on the digital euro. But here, I think also it's kind of, I mean, it's not. Well, how to put it? I think there is a good reason why it just takes time, right? Because CBDCs, in my perspective, do have a completely different use case than stablecoins. So for CBDC, it's really being this digital form of cash, right? So keeping monetary sovereignty for the central bank. But for stablecoins, it's really about, like, for example, about technology, right? So as you said, it's currently mainly the crypto trading, also what Max said about programmability. So all kind of blockchain-based use cases. This is like a stable currency, right? So nothing which is volatile. We have seen the crazy volatility in crypto the last few weeks, right? So I think there is definitely a need for stable coins in general. And I'm actually a big fan of just fiat-backed stable coins. But here also really clearly saying that it has to be a stable coin that we can trust, that is fully backed, right? So I think we will talk about regulatory aspects later on, and the EU is really having a great progress here, but we really have to rely on the fact that the money is fully backed, because otherwise it doesn't, or it shouldn't have the value of like €1 or $1, right? But as the last comment, maybe I'm also quite impressed from these algorithmic stable coins, because the last few years we have seen that most projects honestly failed. So there was like new bits and bases, they all couldn't keep the peg, right? And what we currently see is that there are lots of algorithmic stable coins, also new ones coming out, pegged to the euro, like the Celo euro, for example, that this seems to be more and more a viable alternative. Of course, it's really tough to understand them, right? So how these reserve is managed and how this peg is maintained, it's really tough from my perspective for algorithmic stablecoins. So much education also has to happen here, but nevertheless, an interesting option which one should also turn to, and not just look at fiat-backed stablecoins at the end.
Mm-hmm. Thank you, Jonas. I personally find it very interesting that we were just discussing whether stablecoins are really stable in value, because I've already read several discussions also from the IMF or like also from BIS, who was arguing that stablecoins are not very stable in value because they still fluctuate, even if it's just like a small percentage around like the $1 mark. And in the United States, we also see that the SEC, the Securities Exchange Commission, is regulating stablecoins, which is for me also interesting, because like certainly we could argue like, would it rather fall under securities, or like who's in charge of regulating this market? We see, for example, in the UK that USDC has now applied for like an e-money license. Do you see stablecoins like Tether or USDC all running at some point under like the e-money regime, or will this be like two different categories?
Maybe if I may to jump in, at the end of the day, maybe from a consumer perspective, and all these laws and regulations come in from the consumer protection. At the end of the day, it's a bet on the issuing company. It's a private entity, and whether this private entity will uphold this bet. And now we can talk and legalize whether this is e-money or whether this is security. I mean, both set of norms have the same application. It's consumer protection. What's the interesting thing though is whether is applied under the securities dimension, because it's kind of a catch-all clause. Especially we all know the Howey test from at least from hearsay. The point is with all that is that we protect those who at first glance invest into those toxic instruments, which are at least nothing else than a bet into a company to uphold this. So it is interesting from a regulatory perspective that now we have these two dimensions, now the securities chapter and the e-money license. The e-money license is from the consumer perspective, nothing else which is guaranteed that the company is able to pay the money back. So it's funny, I won't quote Thatcher here, but at the end of the day, that's exactly the aim of e-money licenses and e-money institutes, that they are able at any time to pay back the money, the USDC. And it's the same with securities. In securities, you have the main question is whether the inner value of the fundamental value of that issuing company is able to uphold the securities value which is issued. So from that perspective, maybe the e-money regime is probably more favorable for the consumer and for those who are investing into stable coins or taking a stable coins position. But frankly, that is it. It is a bet to the issuing company. It is at the end of the day a private entity issuing it, and this comes with legal arbitrage to that end from the perspective of the issuing company.
Mm-hmm.
Maybe to add up on the e-money regime, I mean, what we still need to think about is like ultimately, like, e-money, at least like from a European or like a German perspective, you need to lock the value first. So ultimately, you need to basically take the money, take 100 euros, lock them into an account, have them into an IBAN, into any kind of bank account. And then if you have that locked, you can basically create e-money out of it. You can create any kind of token out of it. But it ultimately leaves us with like a large amount, a huge amount of money, just being locked in bank accounts, and to be traded on any kind of like, any kind of chain or any kind of like, for any kind of use case, just put that aside. But the point is ultimately, it's like walking into a casino. So you walk into a casino, you take 100 euros, you take 100 coins, then you play in the casino, you go out again, and basically you change the coins into actual euro. That leaves the casino with a lot of money. So ultimately, like, all of that money might also be needed to take into consideration, particularly right now, interest rates are going up. But before that, like, we had like basically low interest rates. I mean, low interest rates, that basically means like, you need to create more money on chain. You need to take into account that basically everything which you created or like which you locked up is getting worth less and less each day. That's why, like, e-money might not be as scalable, particularly once you take into consideration that it can only be the same institution issuing and taking it out again. So that's why, like, I think that might be like an issue, and I put large emphasis on like MiCAR in that regards, particularly in Europe. So the markets encrypted asset regulation, because there for the first time we actually have like a little bit of different view angle and viewpoint, and like how you can basically issue several kind of stable coins and make it like basically at least enable scalability to a little extent. Just to add on the e-money discussion there.
Mm-hmm.
Yeah, that's a super interesting point you mentioned, Max, because the business case actually for issuing a stablecoin under the current like e-money license regime, for example, in Europe and elsewhere, is not that clear cut. It's actually a really tough business case because you have to lock up a whole lot of money. In the worst case, you have to pay, as Max mentioned, negative interest on that money. So you can't even invest that in high risk, high return assets. And basically from just providing, like from issuing the stablecoin, you won't have like any fees on that. So, I mean, normally what stablecoin issuers do is they try to build some use cases or some business cases around the issuance of stablecoins, as Circle does it, for example. They're building APIs and gateways in order to use USDC. But under like classic e-money regimes, and I think like as we have seen DM, it looks like DM is now totally like selling off or liquidating. And I think the business case from what I've read from certain articles was definitely one major factor for saying, okay, it's not clear to us how we as DM association members could and will earn money from that business. So I think we really have to find also regulatory regimes and models where stablecoin issuers, because there is a clear demand for stablecoins out there, can do so while still benefiting and profiting from it. Because otherwise, I think just companies and projects, private projects, will do it in other jurisdictions. And that's a big like worry I have about the current discussions around MiCA and the current e-money token and asset reference tokens regimes there, that I don't currently see many companies or many, like, for example, native crypto projects issuing stablecoins willing to comply with those high barriers and willing to go all those steps, regulatory steps, compliance steps, governance steps, without even having like a clear business case in the future. So yeah, that's really something, a huge like political challenge and also regulatory challenge to come up with a model that provides both like consumer protection and compliance requirements at one side, but also provides the opportunity for private projects and businesses to basically come up with those solutions.
And I think this is really an essential point what you're making, Patrick, because in the euro area, it's honestly really tough for fiat-backed stablecoins to be profitable, right? Because we do see the negative interest rate. So meaning the first euro which is collected from a stablecoin issuer and either put onto a bank account or invested into government bonds has a negative return, right? So this means there has to be some other kind of business stream where you get like more money out of, right, to kind of subsidize this kind of business. And I think this is also the reason why when you look at the top 20 crypto or stable coins, that like 19 or 20, depending on the time, are somehow related to US dollar or kind of pegged or want to imitate the US dollar, and only a few to the euro, right? And I think this is honestly a really big issue, because we do see, from my perspective, the necessity for euro stable coins, but also having the situation that it's from an economic perspective or business perspective really tough or even impossible maybe to issue a euro stablecoin that is really profitable due to these negative interest rates, which currently applies in the euro area.
Mm-hmm. Yeah, I have to say that this is a very interesting topic, because I also know that Patrick got recently, or he's in contact with the DeFi protocol Angle, and they at the moment, I would say, operate the most liquid euro stablecoin. However, this one is, I think, maybe you can correct me, Patrick, if I'm wrong, I think like to 50-60% backed by USDC. So the most liquid euro stablecoin currently on the market is backed by USDC, and there's not really like I would say private stablecoins similar to USDC or to Tether in that like market capitalization ratio. Do you guys see that in the future we will see more like diverse stablecoins? Let's say, for example, like the Swiss franc or the yen, or like especially also the euro, will like get more market share over time, or do you think that the dollar will stick like the incumbent in that area, especially now that the Fed, the Bank of Settlement, and the IMF was also talking about potential threats to the financial stability, since, as we said before, there's like now $150 billion in stable coins. So I would be very curious on like what you guys think will likely happen in the near future in that regard.
Maybe to start this time, I think honestly the US dollar will remain dominant, and I even think that the pole position will be like even higher. So there will be a higher difference between the US dollar and the euro, because again, turning to these positive interest rates in the US, it's way easier to issue stable coins there, and also there are more blockchain crypto companies as compared to the euro area. And I also do not really see major impulses from Asia, because in China, like Chinese currency-backed stablecoins are forbidden. In Japan, there has been a consortia formed with biggest banks that want to issue such a stablecoin, which I think is great, but this will rather be a stablecoin that is very likely not even be traded on the markets, because it's just issued by the banks, right, and have an exchange rate from 1. So why putting this on the market? So I do see a clear tendency to have even more US dollar dominance in the stablecoin market, but here also very happy to and looking forward to hearing what the other panelists say about this kind of hypothesis or expectation.
Maybe add on exactly what Jonas said. I have the same viewpoint, because like negative interest rates will ultimately with the current regulatory scheme, we just heard it, won't really create an increase of stable coins in Europe. So that's why I would also see the US dollar basically being favored in that sense. And also coming a little bit from the industrial perspective, it basically hinders industrial companies to also use stable coins, because ultimately first of all you need a use case. Even though you have a use case just an industry application, just take pay-per-use for example, you would still need to have kind of a regulatory basis for that. So let's say if you have kind of a euro-backed stable coin which you want to use for that, ultimately you would pay negative interest rates, and then it becomes even more complicated, because then you need to make more money with the business case, and ultimately you can basically just use a normal euro for that. So you're back to the discussion of commercial backed or commercial based bank money in that sense, and they have trigger solutions for that in order to basically execute programmable payments there. So that basically kind of limits it from a B2B perspective, that a lot of B2B applications or industrial applications can use stablecoins, leaving it only to the financial world. And in the financial world, we ultimately just saw the negative interest rates will ultimately create kind of a death circle. So that's why I would also see USDC and by the way also the US dollar being dominant and being by far one of the currencies I would use for creating a stable coin.
Maybe one, Patrick, this time is your turn.
Thanks. No, I was just going to say I totally share the same viewpoint. I think one thing that is really underestimated when looking at stablecoins is the network effect and the importance of the network effect. For example, Tether is still, like, I think has a market dominance of 50% or something like that in the market, although everyone knows basically that the collateral is way more risky than USDC and others, because Tether is basically backed by a couple of very sketchy like loans and bonds and longer term commercial papers. But still, Tether is by far the stablecoin that has the most integrations with exchanges, with merchants, especially in Asia, with companies that use it as a like treasury payments mechanism, and that's why Tether is able, albeit the negative press and the negative headlines around it, it is able to basically keep and maintain its pole position there. And that's why I think the US dollar will definitely, especially USDC and Tether, will play a dominant role in the future. However, I think that with DeFi getting more and more institutionalized and more both like retail private investors, but also banks and funds eyeing and looking into DeFi yields, I think there will be a strong demand for also Euro stablecoins and Euro stablecoin based yield in DeFi, because I don't think that a lot of institutional investors will want to bear the whole FX risk that is basically attached to just investing USD stablecoins the whole time. So I think there will be a DeFi-driven demand for Euro stablecoins, but I expect this demand to be mainly served by algorithmic Euro stablecoins, like the Angle stablecoin or others, because as already mentioned, I don't see a lot of private companies willing to face the whole like regulatory and compliance issues there.
Yeah, I underline all what has been said. I just wanted to reflect on the FX risk you've said, because that's what I wanted to say, because we see that in regular markets already. Just take a look at the Swiss franc case in the mid-tens, where we see a lot of investors redepositing their Swiss franc positions to yen, US dollar, or somewhere else. So if there is from their home currency perspective and FX risk towards the US dollar, they may reposition, and the stable coin, well, favorites will then and might change, but US dollar had market dominance and will have market dominance, but depending on the exchange rate between, especially from our market perspective, the euro, if the euro dollar pairing is quite one-to-one or stable, so there is no need. But if that changes, I would say that we've seen that in the past, that users will switch their position also within the stablecoins area.
Mm-hmm. Yeah, then I would just have one quick hypothetical question, because I'm always like thinking about what might actually be the implications if Tether is not solvent. So let's say there is really some kind of bank run happening. I guess you are the expert, so maybe like you have already spent some thoughts on that, how this might look like. Do you have any ideas? What would happen?
What would happen from an economic viewpoint is pretty clear cut. So users who hold a USD will bail out on their USD positions. So simply as it is. My question though is, what impact does this have for the industry or for wider markets? Because the perception number one is, if, for example, USD goes bankrupt and has a bank run, this will be, well, Dark Friday, very bad Dark Friday, or if it is a Friday, of course, for the crypto economy as a whole and for crypto markets. And I mean, that's all where thoughts are closing in, but I mean, still, definitely would be a huge blow to the whole crypto economy, that's for sure.
Mm-hmm.
To build on what Georg just said, I fully agree, but what I also like is currently seeing how this risk aspect of stablecoin changes, because what we do see, I'm not a big fan of Tether to be honest, but what we do see is that the balance gets less risky, right? So, and Patrick talked about all these loans and assets really risky, which are on the balance sheet, which still are, but we see, since Tether is now kind of forced to reveal their assets every once a quarter, we see there is a positive tendency, right? So the response to the question would be for me like, let's hope that these kind of deleveraging is kind of continuing, right, for Tether, and that this day just never happens. But if it does, I agree that the impact could be devastating, because we see in terms of trading volume that Tether has more trading volume than all the top 10 cryptocurrencies, according to CoinMarketCap, right, which is a lot, and it would clearly have also major implications on the crypto ecosystem in general.
Okay, then I have another thing that I wanted to discuss with you as well. As you guys know, there was like this Polynet hack where I think several hundred millions of funds got stolen. And we know the philosophy of a lot of people in DeFi who really demand like decentralized money. And the question would be, since providers like Circle or Tether Limited are able to blacklist wallets and therefore also coins, would you really say that by now stablecoins really fulfill the idea of like decentralized money? Or might it be rather comparable to a service like PayPal? Because certainly in that regard, like if Circle or Tether Limited is able to deactivate my holdings, I could see that a lot of people in DeFi would question the usability. And I think that's also somewhat the narrative that's driving all of these decentralized stablecoins like Magic Internet Money, DAI, because people really want something that they can rely on, where they know that there is really like nobody can alter with their holdings. I would be very interested. What's your view on that?
Taking that again, is the first question, I think, and this draws a little bit up to the question we just had. I mean, ultimately, like, it's about trust. So, and what we've always been seeing, like, throughout the whole like crypto journey, like, started by Bitcoin, then Ethereum, and then all the developments we had, was ultimately people like craving for this decentralized form of money and the decentralized form of payments and assets and all about. But the point is that the majority of people, like, slowly moving into the space, there needs to be, or that there is a need for centralized, like, functions. So there will never be fully decentralization. That's just like, kind of like there will always be, the more and more people come, the more and more problems arise. And with that problems, you basically need solutions. And the simple solution is having like basically centralized, a centralized solution for that. So having a look at Coinbase, it's basically like, ultimately it started off as like kind of like a crypto exchange, like being fully decentralized, having that vision of like everybody can own any kind of asset. But ultimately, like, if your funds get lost, you call up Coinbase. So you have a centralized service. And as we've just been discussing, like, if Tether goes bankrupt, or like, if there's a bank run on Tether, it will have like, kind of like demolishing kind of like aspirations and implications for our crypto economy. Because ultimately, if you lose the trust in Tether, you lose the trust in crypto. And if you lose the trust in crypto, like, it's basically nothing worth. So we basically have like, the same kind of issue there, that like, you have centralized entities basically describing and being dominant in the market. And if they get lost, basically the whole market is lost. So having said that, like, this whole idea of like having a full decentralized version, like without any securities and everything is like only controlled by algorithms, would not, like, at least for the mass of people, be like a favorable solution, because there will always be like problems, and these problems sit in front of the computer, are not the algorithms itself, but always sit in front of the computer. And we always like try to figure out like how we can actually like, cheat the system, or like how we can basically like, earn more money than we actually should do. So I would make a point here and say like trust is always like essential, and like ultimately at one point you always need to have at least a small degree of centralized solutions, because you need to have like, at least a customer hotline which you can call up.
Mm-hmm. Yeah, I agree with Max that, I mean, decentralization is a spectrum, right? And there will be like all kinds of different stablecoins on the market, like both very centralized ones and also very decentralized ones. I think in the end, the important thing is that there is choice and that the market will decide like what gets traction and what doesn't. But currently, for sure, I mean, you mentioned, Christian, you mentioned USDC or Tether. Obviously, they have the ability to freeze assets, to freeze transactions. They're obviously not like the ideological perfection of decentralized money. And that has huge political implications, by the way, because the more like USDC, for example, gets traction, and the more of global finance and the global economy is basically based and transacted with USDC, the more that private company and the regulator behind that private company, so basically US-based financial regulators, have a political influence and power on that company and on the global finance and economy. That's also another reason why euro-based stablecoins would be so important politically, because we are always complaining about, you know, the US dominance, about the current financial system, both in terms of trading markets, stock markets, but also in terms of international payments. We were complaining about that when it came, for example, to the Iran sanctions that we weren't able to bypass because the US has such a dominance on SWIFT and international payments. And the huge mistake we're currently making is we're drifting towards a crypto-based financial system where still the US will have a huge political dominance and influence because they basically can crack down on USDC and decide which kind of assets will have to be freezed or not. And that's, by the way, also a reason why the US is currently not cracking down on USDC, because they see it as basically a geopolitical tool to continue to have a kind of big influence on global financial markets. And yeah, so that's another reason why we should really strive for euro-based stablecoins. And the other aspect I wanted to mention is obviously, I'm still quite optimistic that in that kind of experimentation lab for decentralized and algorithmically generated stablecoins, we will see better and better like solutions and more robust stablecoins popping up. I can already see that with DAI, for example, the stablecoin like issued by the MakerDAO. Two or 3 years ago, it was still super volatile in times of like market drawdowns. I remember in March 2020 when the market like crashed, I remember DAI to completely lose its peg for a couple of days or hours. Looking at last year's market drawdowns, both in May and also like now in December and January, the DAI like algorithmically, like the algorithmic liquidation mechanisms with DAI and MakerDAO worked super smoothly and super well. So I'm still quite positive that the more those kind of stability and liquidity mechanisms are tested, the more they are improved, the more trust will also be created on the market, and the more people will also rely on them for all kinds of economic activities, both in DeFi, but also like for international payments.
Yeah, truly. I also wave the European flag. By the way, also in the Ukrainian crisis right now, but that's a different matter. But I mean, speaking about decentralization, we could have plenty cups of tea to discuss the matter of decentralization. But one idea, not one aspect of it actually is the design question. Because if we take the PayPal paradigm, I think the matter at hand is whether there is a control override possible. And this is, I think, the matter at case, especially when it comes to decentralization. And the question is whether this control override could be enforced in cases where you have in protocol embedded upfront compliance or real-time compliance for edge cases where the access of control is really crucial or at hand. So if you have that protocol by design set up with an advanced compliance, you do not need any control levels or any entity control access having over such transactions where you need, at the end of the day, centralized control and breakthrough. So I think that is pretty much the point. And Bitcoin is a very good example for macroeconomic design with regard to the total supply. And that's where I think the whole knowledge and I think development and innovation is in that space, in finding the right design in a decentralized environment in order to avoid such entity or like control driven approaches in order to enforce centralized decision making to get that done to the perspective of the protocol or the ecosystem. So I think that's one of the main points. And as we know from the DAO hack, it's not always clear cut to get all bugs and cases real time or especially in advance done and fixed.
Mm-hmm. Thank you, Georg. Then I would actually like to know your stand on another interesting topic. I know that there's several issuer of CDP-based stablecoins, so stablecoins where you have to deposit a crypto asset and then you can borrow like CDP stablecoins against them. And they always joke about that they would not enter a country with extradition agreement to the United States, and that in the future they very much pursue the idea of forming a DAO. And this is also something that I think I observed now quite often, that like we have like these private stablecoins like Tether or USDC, let's say more USDC, who very much like follows up of with like the ideas of like the SEC, how things should be going. I know that Georg and me were, for example, discussing last year when USDC was doing this this lending program, that the backing had to change from cash equivalents really to cash, and we could also observe that on the Circle website. However, the decentralized stablecoins really try to evade all these regulation that upon the centralized counterparties. Do you really think that just by forming a DAO and just by doing what has happened so far, for example, also this MakerDAO, will provide like a playground that these decentralized stablecoins can survive? Or do you think that regulation will maybe like favor at the end the more centralized counterparts?
Now, if I take that question right away, I think that it is a matter of also legal design to the aspect of whether this decentralized organization could be assumed as such as legal entities. I think that is now what there are many programs working on it, that effing such a DAO might be assumed under legal theory, right? And with that paradigm coming in, I think all such organizations could also be captured with. So now there is some legal arbitrage to that, and now there is, of course, discussion to that you use such tools by design, but I think it wouldn't be an unsustainable path forward in order to break that ground in the future.
Mm-hmm.
Yeah, I think you're referring to the probably one of the most crucial questions when it comes to crypto regulation, not only stablecoin regulation. It is basically the quantification of decentralization and the operationalize the criteria for decentralization, and that's obviously it's super tough on both legally and politically. It's not clear. I mean, there are no clear-cut criteria for what is DeFi and what is not DeFi. I think the Maker Foundation has done really credible steps towards decentralization. They have basically dissolved their whole Maker Foundation, and they are now a DAO driven by contributors and contributor teams. I'm also quite skeptical about the political willingness to establish those clear-cut criteria, because, as Georg mentioned, that will lead to regulatory arbitrage as a consequence. If, for example, the European Union established clear, operationalized criteria for example, the token allocation, at what point a project is considered decentral or not. And yeah, I think that's a key question that will basically be relevant also in probably a decade from now. So we won't solve it here today, and probably won't be solved for the next couple of years either.
just drop to the point. I think it's always like, regulators ultimately like, do need to favor and like take into consideration a lot of topics. Like it's not only crypto regulation, there's a lot of like other topics coming up. And like ultimately, like, it's always like a matter of like, okay, where do we have like highest pressure right now? Where do we need to do something? And as long as there's not like a mass allocation of all of the assets into the decentralized space, and like there's not even like, as Patrick just outlined, not even like a clear definition of like what is decentralized finance. Like until that point is not reached, like ultimately a regulator would not focus on it because said, hey, the value of the assets is so low because there's so less companies doing that and even less customers using it, that they won't even say like, okay, fair enough, like this is not something we should focus on. We should rather focus on like, for example, an ESG policy, because this is what like most people in Europe are currently like, craving on and like want to see. Having said that, ultimately, like, regulator always has like kind of like a kind of like an edgy sword, because ultimately what we've been seeing is even a company such as like Facebook and Libra as a foundation has been like basically evaporated from Europe's grounds, because like, the regulator ultimately can decide on a lot of things. And if you read the first paper on like from the Financial Action Task Force, so the guys who are basically in charge of like doing KYC, AML principles and fulfill them, if they mention like, in the first draft, it was only a draft I have to say, but if they mention there is no thing such as decentralized finance, that is a strong kind of like a really, really strong speech there. So the point is ultimately what they wanted to do is not like, at least from my point of view, it's not like, cut through all the crypto companies and like, just say like, hey guys, you don't have any grounds to be there. But what they wanted to symbolize is like, guys, we watch you. So don't think that only because we don't act, it doesn't mean that we don't watch. We watch, and if it's like getting significant traction, we will definitely figure out a solution for that. And we've already been seeing it, like for example, the crypto custody license in Germany, where BaFin like, basically established like legal grounds where people basically have like at least guidelines and like actual laws where they can actually like, work within these laws and like basically create solutions for that. And I think, as Patrick just outlined, the topic which we just opened up is something which will be definitely relevant in a decade from now. But I would say like, at the current time being, we actually need to like, kind of like draw attention up on the Bitcoin, Ethereum trading and make that legal, like in legal frameworks, which is on a good way, and then like, slowly work into like another world of decentralized finance. And within a decade from now, I think we will actually see solutions and regulatory approaches towards that. But I won't see like any regulators focus on that right now, because it's just not from a volume size that relevant.
And I guess the question of regulation also depends on the use case in the end, right? And also the other way around. So if you have like a stablecoin which is intended to be censorship resistant and private, well, it's really, and decentralized, it's really tough to get it regulated, right? Because the use case is like to be free of this kind of regulation, right? So there's of course a really strong trade-off between these privacy and / censorship resistant on the one hand and regulation on the other hand, right? So I think here also in terms of these trade-off, there is lots of work, at least when it comes to decentralized stablecoins, it has to be fixed, because for centralized it's easy, right? Data are collected even like pseudonymous on a blockchain, so quite easily kind of. But for really private stablecoins, for example, like instead of Tornado Cash using some kind of zero knowledge proofs to ensure privacy, it's really tough, or I would even go further and say it's like impossible to regulate them, similar to the concepts we have in place for such regulation today.
Mm-hmm. Yeah, I have to say I agree with you guys, with your take, Jonas, but also with you, Maximilian, that the volume is still, I think, not that high that regulators are caring right now. However, I know that it got mentioned in the Congress, and they were like making jokes about magic internet money, which I found quite hilarious. But now I think we come already to our last question, and this is a bit about the outlook. Like, how do you guys see, like, let's say the stablecoin market, and especially in regard to CBDCs? Like, let's say like 2 years, 5 years, like with the inception of CBDC that they enter the market, will there still be a place for stablecoins, or will they be completely replaced by CBDCs? Like, how do you guys see like the developments? What do we have to expect? And do you guys also think that this will be more like the decision, like what will succeed at the end, will be more retail driven, or will this be more institutionals, which will then somewhat decide like who is the winner of this competition?
Yeah, so maybe I can start with this question. So I think there is really place for both of them. So I think there are different use cases, as I said in my in the first question, for CBDCs and stablecoins. So for CBDCs really being this digital form of cash, right? So bringing cash to the digital age, being a form of central bank money, things like that. And for stablecoins, it's really about these great benefits stemming from technology. So I think there would be a very, very high correlation and also like a competition if a CBDC would indeed be based on blockchain technology, which I personally just don't see in the euro area becoming reality. So I would say there will be a CBDC which is not based on blockchain, at least what I would expect. And there are stablecoins based on blockchain, and they will coexist, right? The other one has this use cases, the other one has that use case. So I'm not really afraid and kind of say, okay, when CBDCs go live, every stablecoin will vanish, because as I said, different application domains and different use cases from my perspective.
Yeah, I 100% agree with Jonas. I think oftentimes, especially publicly, stablecoins and CBDCs are portrayed as being in total competition, and that basically public CBDCs will be the response to the current emergence of stablecoins. I think that's mostly bullshit. I think that the stablecoins and the demand currently basically addressed by stablecoins is not something that CBDCs will be able to compete on, as mentioned, crypto trading, DeFi, also international payments, and also like treasury payments for crypto companies. I think CBDCs will not be technologically capable of competing on those grounds. I think, as Jonas mentioned, I believe CBDCs will be more basically a digital form of cash and compete with cash in that regard. And yeah, probably last sentence for me to like for that session is, I think we also as an industry should really try to convince our like basically politicians and our regulators of that, and that the way we compete, for example, in terms of financial services innovation, but also in terms of money, the way we outcompete China, for example, with its like CBDC, is that we empower basically the private sector to build what the private sector does best, to figure out what the markets want, what the retail and the institutional markets want, and that we're not trying to build a like CBDC from the top down without letting like innovation flourish and just letting the market decide what will succeed in the long term. I think that's basically we should be very, very wary of basically internalizing the same narrative as China does, that crypto is just a scam and speculation, and the answer to that is basically a public CBDC response. I think that's not the way we operate like in the Western industrialized world. And I'm quite hopeful that also in the ECB and in the European Commission that most of the stakeholders there are realizing that.
Maybe taking up on that, like 100% agree, like, and also say there is no one-fit-all solution. So that you can even like have a look at, for example, like coming from the old centralized boring world in that sense, like, and even like within CBDCs and like, tokenized commercial bank money, even there is a huge discussion, like CBDCs fulfill an entire different like kind of functions than what programmable commercial money will do, like, or programmable payments in that sense will do. Because ultimately, like as Jonas said, it's digital cash in form of a CBDC, and programmable payments will ultimately, like, trigger industrial applications, will basically foster new business models, will enable, like, the German economy and the European economy ultimately, like, to basically create new business models and new grounds, as, for example, asset as service business models, pay-per-use, and so on and so forth. There's tons of business models out there which will be enabled. But even these two have nothing to do with a stablecoin, and like even nothing to do with themselves. So it's like two different forms of money, two different forms of like technological advancements for like traditional payment system. So it's like an entirely different kind of like it's an entirely different kind of type of sport, and that's why like you would say like, hey, let's build a football, and with that football we can play soccer, we can play American football, but we can also play golf, and that's simply not possible. So having said that, obviously, there will be like a reason for having stable coins. There is a vast majority out there, like, on use cases, which is actually like, directly fitted towards a stable coin. So there are always three developments. But what we will see, and I think this is the most exciting times which we have ahead right now, is basically a merge between and all the different industry will learn from each other. So for example, CBDCs, we already saw that had a huge influence because Libra or Diem started off. Then the regulator thought, okay, we lose the sovereignty of money, so let's do something. So ultimately, they triggered the discussion around it. And with that discussion triggered, obviously they thought about designs and is it DLT based? Is it non-DLT based? And all of that discussions and design principles basically learned from each other. So what we see is basically coming closer together, the centralized world becoming more decentralized and the decentralized world becoming more centralized, ultimately in that sense. So you basically create several kind of solutions and everybody will learn from each other. And that's what we're going to see. And what time span, I have no idea. Already depends on a lot of factors. So it would be too much to say in 5 years of time, we will have a CBDC. It always depends on several actors, several use cases and research and as well as actions. So not putting a number out there, but at least we will definitely see advancements, strong advancements, because what we all saw is that physical cash is kind of outdated. So any kind of digital cash and form of digital cash is used by inhabitants and customers. So that's definitely here to stay. And then let's see where we actually basically end up with.
Mm-hmm.
Yeah, personally, I totally agree. I would love to have a digital euro by 2023, knowing that it's not a realistic number, but maybe Jonas, you could provide us with a realistic number.
Yeah, maybe rather 2026, I guess, but I would also love to see this already next year. But I would also be happy about a few important and big stablecoins by 2023, so not too high expectations.
But by the way, my girlfriend is from Chengdu. They already have the EU one, so they're, I guess, 4 to 5 years ahead. Should really pay the town a visit, the city. Okay, great. I have to say, I want to thank our guests today for being here on our panel. This was, I collected a lot of questions over the past 6, 7, 8 months. I mean, there's just so many topics around stablecoin that are very interesting. Certainly also Maximilian with his use cases, with his pay-per-use. I still remember when I was studying that the very first time last year, and I'm very excited to read more about Cash on Ledger, also about unstoppable finance. And I'm also aware that the Digital Euro Association is growing by every day. So I would hope that maybe later this year or next year, we maybe get together again, discuss then the new ongoings in the stablecoin markets, and yeah, see how everything evolves. But that is for today. I want to thank all the guests who have been participating on the panel and also the audience for tuning in. And I wish you a very nice day.
Thank you very much.
Thank you. Bye.
Yes, bye-bye.
Bye-bye.
Bye.